If I'm
Well,
driving,
there's an even better one than having a home office, which I'll tell you about if you want me to. But there's
oh,
a
let's go. Let's
okay.
go.
So basically, what happens with home office, oversimplify a little bit. Let's just say you have a 3,000 square foot home and your home office is 300 square feet, 10% of it. And the CPA does some math. So you allocate, you know, your electricity, whatever it is, to that space. And that is a good number. Here's an interesting uh, off take of that, uh, which is the way the Augusta rule works is if you have a business, which could be single member LLC, S corp, whatever it is, and if in that business you have a practice of holding meetings, your company can rent your home from you for the meetings, right?
Yep.
So now, if you think about that, the first, that rent is deductible by the company because it's a business expense. You could have the meeting in a hotel in Austin or whatever, wherever it would be. So the beauty of the Augusta rule is that the rent that the company pays to you to use your residence for a meeting, 14 days of that income a year is totally non-taxable to the homeowner.
Right.
And the way that works is you have to get a valuation, which we arrange for clients if they want us to do it. Well, what would it cost if I went to a hotel in Austin? What would it cost to have the meeting there versus having it in my house? And it turns out that when you do the math, the average can be something like $2,000 a day. Rent the room, get the audio visual guy, bring the food in, whatever. So 14 days times $2,000 a day, that's $28,000 of tax-free income. This is not monumental, but it's a sort of freebie there ready to be taken by you. I can tell you, at least when you mentioned it to your CPA, he'd heard of it. We've had cases where clients had CPAs that hadn't even heard of the rule. The rule is in the Internal Revenue Code. This is not edgy creative stuff. This is like basic blocking and tackling. So, and I think it's just, and this is not a criticism, but the temperament, the mindset, the comfort level of the typical CPA. One person I was talking with a week or so says they only want to paint between the lines, right? They don't want to get outside the lines. That's not often a good fit because most entrepreneurs have a lot of the success that they have because they paint outside the lines. That's and look, we're not doing anything. No one's going to jail for stuff we're doing. No one's paying huge penalties, but the bigger opportunities are in the gray zone that's outside the lines, not what's inside the lines. But it's still shocking that you don't even hear from your CPA about, I don't mean you personally, tons of people, that you don't hear about the stuff that is right in the middle of the fairway.
Well, and when you explained it, you added a dimension that never entered my conversation with CPA. So the approach I was taking was I was finding comps. I was looking at VRBOs
Right,
and was like, what would an equivalent house rent for?
right,
Not, which is different than what you said. You said, what would it cost for me to rent a conference room at a hotel?
right.
Well,
And
that's a
there's
whole
a
lot.
little bit of a market out there of people who so you want to have a justification if you're going to take advantage of this rule of the amount that the company paid you and you did not report as income. So there's a little cottage industry out there of people who specialize in doing those valuations. And the guy we use, I think he's in Texas somewhere. I have to look that up. But so uh, that's just a very simple, straight. There's a lot of these strategies are it's all record keeping, right? So if you're going to take advantage of this strategy, you want to